Happy New Year! My name is Grant Mosier. I am the Director of Engagement here at Blue Sky Wealth Advisors, and I wanted to welcome you to this market and economic update video. Today we'll be covering 5 key lessons and insights from 2023 that could continue to drive markets in 2024. First up, I love these charts. This one shows just how strong of a year 2023 was for both stocks and bonds. With reinvested dividends, the S&P 500 gained 26%, while the NASDAQ was up nearly 45%. The S&P 500 is now hovering right around its previous all-time high from exactly 2 years ago. Next up, we have the U.S. Aggregate Bond Index that gained 5.7% after falling into a bear market in 2022. While bonds have not quite made up for all of their prior losses, last year's performance shows why we believe bonds still play an important role in diversifying portfolios for our clients. And then lastly, international stocks, small caps, and a variety of other sectors all performed pretty well last year too. Only commodities struggled last year as oil and other commodities fell. But we need to keep in mind that this is after 2 extremely strong years when commodities were some of the best performing asset classes. All right, this second chart zooms in into the bond performance that was covered briefly in the prior chart. The red dots on this chart show how low the bond market index fell each year before rebounding. Last year in 2023, bonds were down 7% during the banking crisis, if you remember that, but fully reversed course, ending the year on a strong positive note. When you look at a chart like this, it's easy to see that bonds tend to be positive over the long term, which is why they help to balance stock market volatility. However, as we saw in 2022 in a big way, investors should expect the occasional bad year depending on interest rates and inflation. All right, this is a big one. So perhaps the biggest driver of markets and the economy over the past few years has been inflation. I know we're all probably tired of seeing the headlines about inflation, but this third chart shows the impact that inflation has had on Fed policy, specifically that it drove one of the fastest rate hike cycles in history. One reason markets performed as well as they did last year in 2023 is that inflation improved dramatically. You can see on the right-hand side of this chart that the Fed expects that it could begin to actually cut rates in 2024 by as much as 75 basis points or 3/4 of a percentage point. And if this happens, falling rates could be a tailwind that helps to support the markets overall and potentially represent a reversal of the bear market trends from 2 years ago. This fourth chart shows just how strong the economy actually has been. In the third quarter of 2023, for instance, GDP grew 4.9% on a quarter-over-quarter annualized basis. This was driven by consumer spending and a rebound in business investment as interest rates started to stabilize. What does this mean? It means that the recession that was widely anticipated in 2023 never actually occurred, which is another reason markets performed as well as they did. So while this is good news overall, many do expect the economy to slow from its recent pace. So the takeaway for us is that investors should continue to keep expectations in check and stick with your plan, and really just continue to focus on controlling the things that you can control. All right, finally on this fifth and final chart here, it's important for investors to not become complacent after a great year in the markets like 2023. Every year experiences market pullbacks driven by unexpected events. Last year in 2023, these included things like the banking crisis, rapid Fed rate hikes, dysfunction in Washington, escalating war in the Middle East, cracks in China's economy, and several other headlines that you likely saw and remember. In the coming year, investors will likely focus on possible Fed rate cuts and a presidential election, and I'm sure other news headlines that we can't even predict at this point. So the big takeaway, the big lesson of the past year is that investors should just continue to stay invested and diversified. This is still the best way to achieve long-term financial goals. So in closing, we hope you have a wonderful start to 2024 and a great year ahead. If you'd like to discuss any of these topics in more detail, please don't hesitate to reach out to your Blue Sky team. We look forward to hearing from you. Thank you.